Welcome back to The Explainer. Today, we're taking some pretty complex source material and breaking it all down into clear, easy-to-follow steps. We're looking at a very specific business model presented in the training materials by Rodney Bush for Legacy Tax Resolution Services. Essentially, we are about to follow the exact waterfall of money, straight from a client's tax return, down through the corporate fees, and right into a consultant's pocket. If you love seeing how math translates directly into business structures, well, you are absolutely going to love the breakdown we have for you today. Let's get into it. All right, to really grasp this commission structure, we first got to understand the sheer scale of the product itself. The source material highlights a pretty staggering figure. According to the Federal Reserve Bank of Chicago, there are more than $11 billion in unclaimed FICA tip tax credits annually. Think about that for a second. That is an enormous pool of potential capital just sitting there, completely untouched, waiting to be claimed by eligible businesses in the hospitality, food, beverage, and now beauty industries. And when we drill down from that astronomical $11 billion to just an individual level, the numbers are still incredibly striking. The pitch materials note that the median refund for a single restaurant owner is $101,000. That's a massive cash injection for any small business. But, in the context of Rodney Bush's affiliate training, this number serves a second purpose. It's the hook, the bait for prospective sales consultants. Which leads us directly to the absolute most critical question presented to the sales consultants and team builders watching this pitch. If you go out, find these restaurant owners, and help them recover their six-figure refunds, how much of that money actually flows back to you? Okay, let's dive into this. Here's exactly how we'll break it down. First, the FICA tax opportunity. Second, legacies, fees, and deductions. Third, funding the commission pool. Fourth, your slice, agent payout. And finally, scaling up, team tiers. Section 1, the FICA tax opportunity, a massive unclaimed pool. So the pitch points out that IRS Code Section 45B has actually been on the books since 1993. Yet, it's estimated that 80% to 90% of small businesses completely miss it. Now, you might be wondering, why is that? Well, the training asserts that CPAs simply lack the time during the incredibly busy tax season to do the complex, retroactive calculations that are required here. Furthermore, payroll providers typically view reducing payroll tax withholdings for this credit as a major liability, so they leave the responsibility entirely on the business owner. This creates the exact gap that legacy tax consultants are stepping in to fill. Section 2, legacies, fees, and deductions, the top of the waterfall. To keep the math totally clean and super easy to follow today, we're going to establish an anchor number directly from the examples shown in Rodney Bush's live calculator spreadsheet. We'll use a baseline client refund of exactly $100,000. So let's say the IRS cuts a check for $100,000. What happens next? Let's run the numbers. The calculator systematically walks us through the initial corporate cuts. First up, there's a 25% contingency fee that goes to the tax firm Legacy Tax Services. On a $100,000 refund, that's $25,000. But that's not all. Step 2 involves a tax filing fee. The firm charges $2,000 per year of taxes filed. Because the program typically recovers money for the current year plus the 3 previous years, so 4 years in total, that fee comes out to $8,000. Now, these are presented not as hidden losses, but as highly transparent steps required to process all this complex paperwork.
So, doing the math, the $100,000 refund comes in. $25,000 is carved out for the contingency fee. Then, out of that $25,000 firm fee, the $8,000 filing fee is deducted to pay the actual tax preparers. This leaves a remaining corporate balance of $17,000. This $17,000 is the crucial number. It's the pool of capital that is now ready to be divided up between the company itself and the sales force.
Section 3, funding the commission pool, the crucial split. Now, what's really interesting here is how that remaining $17,000 balance is distributed. The calculator relies on a very precise split. The firm retains 35% to keep the lights on, funding operations, staff, general company expenses, all that good stuff. The remaining 65%, however, is injected directly into an affiliate commission pool. The pitch heavily emphasizes this point. The clear majority of this balance goes straight to the consultants who are out there actively bringing in the clients. Mathematically speaking, 65% of that $17,000 leaves us with a hard dollar amount of $11,050. This is the total commissionable amount generated from our initial baseline $100,000 client. Now that we've firmly established the exact size of the pie, it's time to carve out the specific slices. Section 4, your slice, agent payout. Before we start slicing up that final pool, let's just quickly summarize the mathematical waterfall we literally just traveled down. We started at the top with a $100,000 total credit, subtracted the $25,000 contingency fee, subtracted the $8,000 filing fee, found our $17,000 balance, and then extracted our 65% commission pool to arrive at $11,050. This transparent tracking is totally designed to build absolute trust in the math. So the crucial point now is how this $11,050 pool is divided up. And spoiler alert, it is not a flat payout. It's actually split into 4 distinct tiers. The massive lion's share, 75% of the entire pool, is reserved exclusively for the selling agent, the person who actually brought the restaurant owner to the table. The remaining 25% is trickled upward to the team builders who recruited that agent, and that's divided into 10%, 10%, and 5% splits.
And when you calculate that 75% for the selling agent, boom, you get $8,287.50. This is the final payout number they slam on the screen during the pitch. It's the direct, tangible reward for following the math. Bring in just one client who qualifies for a $100,000 refund, and you walk away with over $8,000.
Section 5. Scaling up team tiers. Now, the source material heavily promotes network building alongside individual sales. In fact, Rodney Bush says it directly in his presentation. If you decide to build a team and do what I'm doing, you get paid 3 levels of people. This introduces a 3-tier upline system, which is entirely funded by that remaining 25% of the commission pool we looked at just a moment ago. And this brilliantly illustrates exactly how that remaining $2,762.50 cascades right up the network. If you recruit someone hitting Tier 1, you get 10% of their total commission pool, which is $1,105. If your recruit brings someone in for Tier 2, you also get 10% of that, another $1,105. And if that person brings someone in for Tier 3, you get 5%, or $552.50. The kicker? This happens on every single deal closed beneath you in the entire structure. The presentation actively contrasts these 2 very different approaches. You have the single agent hustle, where working completely alone still yields a very respectable $8,287.50 per baseline deal. But then you have the team building approach, where adding those passive $1,105 and $552 payouts from an active downline network can exponentially multiply your income, completely without you having to personally close the restaurant owners yourself. And keep in mind, as the calculator examples point out, $100,000 was literally just our baseline. The source materials remind viewers that many clients, especially those with multiple restaurant locations, will receive much, much more. The live calculator shows that if you land a client with a $400,000 refund, the math scales perfectly. It yields a staggering $41,925 direct agent commission for just one single deal. By visualizing the exact flow of funds from the IRS straight down to the consultant, the source material aims to build overwhelming confidence in the math behind the FICA tip tax credit. It leaves the viewer with a pretty provocative question, pulled right straight from their pitch. You see the opportunity, you've seen the math. Are you ready to turn tips into cash flow? Thanks so much for joining us as we unpack this financial architecture. We'll see you on the next explainer.